This content is for educational purposes only and is not financial advice. Investing involves risk. Do your own research and consult a professional before investing. Okay, investors, welcome to the third annual 2025 year in review 2026 income outlook. And being that this is the third time, we got a fun lineup of just topics that we're gonna hit on. And as always, for this year in review and outlook, I got your number one source for your income-oriented investing. Adriano, how you doing, buddy?
I think you're number one. I think I'm going to be number two real soon, man. You're making good progress, but you're always very nice. Thank you so much, my friend. Always good to be here.
No problem. I just in time and when we get together like this, I always say you're the number one source, and I'm the alternate. So, anyways, investors, we got a good lineup for you. So, what I want to do is just touch on some of the topics that we're going to hit on. Some of this is going to honor legacy viewers, the people that have followed Adriano for a long time, people have followed me for a long time, and then we'll sprinkle in some stuff for maybe newer folks as well. But the very first one we're gonna touch on is basically the biggest misunderstandings that we see from the critics, the skeptics, the people who really hate on cover call ETFs. What are the phrases, the ideas that they talk about that we think there's more to it than what they subscribe to. We're going to be talking about fund launches of 2025. We'll be talking about our predictions from 2024 going into 2025. I got a clip for you guys that we'll watch together, a 2-minute clip, and then we'll talk about that. We're gonna retroactively award funds of the year. These might not necessarily be like the best in terms of performance, but I think it would be a good idea to talk about since 2021. What are the funds that have really impacted us in our opinion? We'll give our own definitions as to what that looks like, and then we're just going to round this out with Adriano's favorite. Going to make him speculate, predict what we might see in 2026, or put it to this way: what Adriano might want to see in 2026, along with myself as well. So, investors, buckle up, grab your popcorn, grab your coffee, and let's hit this. Adriano, for 2025, what from the haters, the critics, the skeptics, whatever you want to call them, what is the most misunderstood uh, phrase, idea that you have heard in your opinion? Can you lay that out for the audience?
Well, the most common one I still think is, I've been doing this for over 5 years now, and that's like a lot in terms of the investing space. I think stock market, if you will, experience, but this is nothing new. I've experienced it, years ago when I started doing videos on Hamilton's HYLD and HDIV. I remember HYLD, lots of speculating and lots of hate on HYLD. It's going to go to zero. Remember that? It's going to go to zero. There's this kid that wrote this whole humongous Reddit post, and I haven't heard from him. I wonder why. But even before that, even before HDIV and HYLD, these great all-in-one style leverage cover call ETFs, which have been performing extremely well, most of them outperforming, some of them, I'm not going to say, some of them outperforming the market itself or the corresponding, equivalent, if you will. But even before that, I got the same kind of hate with or misinformation, if you will. I'll call it misinformation just to tone it down. With split share funds. So remember at the beginning when all these great cover call ETFs with leverage didn't exist. You had more of the classic ones, but they didn't have leverage. They were more sector based, pretty much guaranteed to underperform the underlying, which most non-leveraged cover call ETFs do, and they're just designed that way. That's just how they're designed. Except for Top Alpha, they seem to have found the formula, but maybe we could discuss that later. But split share funds, right? You had to those were kind of the more popular covered call strategies, but a lot harder to understand because they were closed-end funds and preferred versus Class A. And if you actually Google passive income investing, like I remember I did it a few weeks ago because people were writing negative comments on Reddit about my channel, and this I trusted this guy and I invest in DGS, which is Brompton's one of Brompton's flagship, all-in-one split share funds that focuses on Canada.
Mhm.
And you look at it now, and the performance is just phenomenal. Beating the Canadian market for sure. But because they're highly leveraged, I guess at one period of time it went down really hard, and somebody started complaining about it, lost all this money. So, listen, I think the number one thing is education. It's education. They don't understand how these funds work, what they're really investing in. The number one mistake from newer income oriented investors or covered call ETF investors, I think, in my opinion, remains you don't really understand. They just look at the yield and nothing else. Like they don't understand what they're investing in. So I think it's really a matter of education. It's still the number one thing. But of course, this is getting better and better with time, like my channel and now your channel. And there's more and more and more other channels, right, that are talking about these funds and really trying to talk about them in an educational point of view. Okay, what is a cover call ETF? What are you actually investing in, et cetera, et cetera. So number one thing to answer your question, make it short, education, right? People don't know what the heck these things are, what a cover call strategy is, and they just get blinded by the yield, right? I think that's the number one thing, in my opinion. What do you think?
Yeah, I would say just to just to launch off of what you were saying there, I think there is, as far as like critics or people that look at us and they think we're talking about nonsense, there is a difference between reading a definition and data is important, read the data, but there's another element to it as well, which is the experience of what it looks like to actually invest in these things. I know our channels, we do portfolio reveals. I post weekly my performance, the total return versus other indexes. I've been doing that since November of 2023. So you don't even have to watch a video. You can just scroll through my posts if you're curious. Try to be transparent to see what's actually going on under the hood. And maybe another one I would say is I see a lot of this from people that tend to really get on our case as far for the cover call ETF stuff, and that's talking about a lot of capped upside. You hear this a lot, capped upside. Like, why would you get into something where it doesn't grow? Well, let me ask you this, Adriana. Would you truly get into something where it really has, where your money truly has no ability to grow whatsoever? I'm going to answer it for you. I know you're not, and I'm not either. Okay, so like let's just maybe stick right there. Like you had mentioned, education. Just because a cover call fund, maybe it's right in the title. It's a cover call fund, and it's like you hear the term words like capped upside. Well, keep in mind that let's just use the Canadian market for example, or there's a lot of cover call funds where half the portfolio is covered, meaning the other half is unbound. It can grow. There is no cap on it whatsoever. There, you might also find yourself in a period where the market really isn't going up whatsoever. Maybe it's going sideways, it's going slightly down, which means guess what? Nothing's getting capped anyway, and you're just collecting premium. I mean, one of the nice things I really like about this strategy is the diversification between how we get our return. One of it's price performance, and one is premiums generated
Yeah.
from the call option. So that's what I like because it means I can still get some kind of return even in a flat market or a down or even a down market. And but I think that's one of the biggest ones is I just hear this a lot, capped upside, you can't grow. And I mean, I've talked and met so many people where they experience something different, very differently than what the critics are talking about. Again, data is important, but I can definitely say that yeah, many people are experiencing growth where apparently there shouldn't be.
Yeah. Two things on that. So the capped upside, that's a feature. It's not a bug. I mean, cover call ETFs have capped upside. That's the nature of what they do, or the nature of a cover call strategy. No matter what if you're doing a cover call on whatever it is, you are limiting, or you're capping your upside. But like you said, there's a wide range of. The question is not really how that I'm capping upside, yes or no. The answer is always going to be yes with a cover call strategy. The more important question is how much upside are you capping? What are your objectives, right? The more, if you're very, very, very bearish, you're gonna want to go. You're gonna want to prefer. If you think the market's gonna be flat or down and there's gonna be no upside, you're gonna go with the cover call ETF that does writes a lot of cover calls, right? So you could, because you're betting that the market's not gonna go up. So when someone starts having a bearish sentiment, they'll, even if they own individual assets like a stock or whatever or an index, they could start writing their own cover calls. And depending on the degree of your bearishness, you could write more, or well, I'm not necessarily bearish, but I need some income, right? So there's different levels of capped upside, but the fact that they say capped upside, yeah, so what? It's like reading a term in the dictionary. It's like you're not telling me anything new, right? I mean, that's what a cover call strategy does. So myself personally, and then the second thing you said, the growth, right? So capped upside, it means you're limiting your growth of the assets for sure. But like you said, if there is no growth, sideways market, down market, those premiums are essentially free money if you're doing the cover call strategy right. So it's just a feature of a cover call ETF. That's why they, whenever you look at a website or whatever, they say reduces volatility, lowers your risk essentially, right? Because those premiums are cushioning any downside or non-growth in the fund. But personally, I want both. I want the income, I want the yield, meaning I want those premiums, but I also want the growth as well. I want that total return. And growth, I keep saying this, but I think it's very important to understand. You tell me what you think about this, your opinion. Now you've been in the game for years, so you talked to a lot of people, you heard a lot of things. I think the term growth is one of the most misunderstood words in investing. People automatically assume it just means stock prices going up, but that's not the case. It's the growth of your money. You need to replace the term growth with performance or return or total return, right? So in my vocabulary, growth is not in my vocabulary. Total return or performances, right? Because you're trying to grow your money. That's what it's all about, right? So just because you have a covered call ETF doesn't mean you're not going to get any growth, any total return, any performance. Now, of course, you're going to, over time, right? Over time, if you were talking about things like the overall market, like the S&P 500, for example, we'll keep it simple, but even a group of stocks, typically over time, it goes up, the prices go up, right? So when you're doing a cover call strategy, you're automatically capping some of that upside. You're limiting that growth over time. So there's two reasons why someone really wants, the main reason when someone invests or does a cover call strategy or invests in a cover call ETF is because they want cash flow. They want a source of income, which is coming from those premiums. But there's another maybe smaller group, I think, minor group, who actually they want less volatility. They want a little bit less risk. They want a little bit of a smoother ride. There's many things cover call ETFs solve. They solve, in my opinion, the drawdown problem, right? If you have index funds, well, you could just get an S&P 500 with covered calls, and not only do you lower your risk a little bit, but it's kind of like drawing down your investment over time, because those distributions, this is another misconception, the distribution from covered call ETFs, that's part of the net asset value. That's part of your investment being given to you. I'm not saying it's your money coming back to you, but when they write those cover calls, those premiums, where do they go? They go in the NAV, right? They increase the NAV, and then every month the fund manager selects at their discretion an amount to give out to you. And that's coming from the NAV. That's why on every ex-dividend date, the NAV goes down by the same amount, right? 25 cents. On ex-dividend date, the NAV or the stock price, we could say NAV and stock price, kind of the same thing on ETFs, because they're open-ended funds. So the NAVs and the stock prices are almost always identical, or maybe 1 or 2 pennies off. But you know what I'm trying to say, right? So it's really a matter of education. They're really designed for a specific purpose. But in my case, I don't care about the lower volatility or the lower risk. I don't care about that. I want return. I want yield and I want return. I want consistent cash flow. So this is why in 2021 was where the floodgates open, and you have what I call the OG ETF, HDIV, that added 25% leverage to the mix to try to make up that performance gap. So now all these growth bros, if you will, are kind of in trouble because that leverage kind of solves that underperformance. Now, of course, it's never going to be perfect. It depends on leverage costs, which are very, very cheap, which is great for us that invest in these. It's a small amount of leverage. So now the performance gap has closed. So I could have my cake and eat it too now, right? So that's why I love these covered call ETFs. And like you said, it's about the innovation, right? There's innovation in the space, 25% leverage. Now everyone started doing 25% leverage versions. Now there's 33% leverage. The US saw that, and now Neos and Tap Alpha are going to come out with their lightly, modestly leveraged cover call ETFs. And we're not talking about the leverage like the 2x, the 3x designed for traders. This is leverage designed for long-term buy and hold investors. So it solves that performance gap. So that's why I'm very excited about these. That's why these funds are so good and they've been very, very popular and they're growing because now you could have your cake and eat it too. Does that make sense?
Yeah, it does. I think the maybe the word would be it's like ultimate flexibility is really what it
I
offers.
love that.
You
I
can
love that, my
you
friend.
get
Yes.
cash flow, you can spend it for your living expenses. Hey, I don't need maybe a portion of this cash flow. I'm just going to reinvest. I don't have to worry about owning some condo halfway across town and tenants that don't pay rent and bills are piling up over there and it's just a hassle to deal with. Yeah, I mean, the one thing I've been saying for years, even on my channel, is the kind of like investor I am when it comes to income is I'm yield seeking, growth leaning. So that really sort of encapsulates what I'm all about. It doesn't mean that I'm anti growth. Well, I know. Okay, we're put it this way. I'm pro pro growth in the total return aspect, right? I want most of my return coming through on the income side of things, but guess what? I still want a decent chunk coming through on the price end of things. So no, I think you explained it really well there. You encapsulated everything there. So we've gotten out of sort of maybe the biggest misconceptions that we've seen. Let's actually now, Adriano, look at some of the fun launches that we saw in 2025. Let's look at the 2025 cover call ETF fund releases in Canada. I want to give a special shout out to Martin, who's on the PII Facebook page. He puts something like this together every year, and he's definitely a top contributor there on the Facebook page. So well done, Martin. This is a great overview of just look at all these funds. It is so wild to me how many more keep getting pumped out every single year. Now, a lot of the volume of these cover call ETFs come in the form of a lot of single stock cover call ETFs. I think if that wasn't part of the equation, it certainly would be a lot less. But at any rate, what to you, Adriano, maybe stands out on this list that you see here? We got plenty from I mean, it's across the board. We got even in like a place like August, Harvest, we got Nine Point, we got Purpose. Yeah, just tell me what stands out to you amongst this list of funds that have come out.
Yeah, I mean, a shout out for sure to Monsieur Martin Cote. I love that guy. He always has great posts in the Facebook group, always keeping us up to date and making these cool charts. So shout out to him. I love that guy. What stands out to me is just the sheer amount of amazing options that have come out. I mean, I kind of say this expression nowadays, 5 years ago, it was the dark ages of cover call ETF investing. Now we've already passed the renaissance. I think we're in the golden era. I mean, look at all these options. There's covered calls for everybody, right? It's almost like you could get that format or a covered call format no matter what type of investor you are. If you like single stocks, if you like sector specific funds, if you want a little bit more stability, if you want a little bit more yield and more torque. I love that word torque that Michael Kovac said on the channel. Things like a like the single stock ones or the packages a little bit more torquey, right? Because they're selecting, you still have diversification, it's a little bit more concentrated. So you're getting a little bit, yes, maybe less stability, a little bit more volatility, but more volatility, as you know, is this is a crazy thing. So volatility is typically seen as a negative thing in the market, but the most volatile assets are the best performing assets,
Hmm.
typically. And
Yeah.
in our world, it's very important to understand that the amount of premium or the amount of yield you could generate is really based on the volatility of the underlying holding. So if you're doing cover calls on one very volatile asset like Bitcoin or one very volatile stock like MSTR or Tesla or now Nvidia, the volatility is pretty high up there. You can make these really nice premiums. So I love that there's different cover call strategies. I love the competition. You know, there's big competition between, I would say it's healthy competition because these guys all know, you know, you've met a lot of them now. I've met a lot of them now. I know them business wise and even some personally. They're in competition. They all talk to each other. They know what's going on. You know, the guys at Hamilton, the guys at Harvest, the guys at Evolve, at Brompton at 9 Point now is in the game. You have Purpose in the game. Of course, you have some more legacy players like BMO, who's having a hard time, in my opinion, innovating. But that's just what happens when you're in a big behemoth corporation, right? So I can't tell you how many times I ask them, maybe at least 3 times a year, where are your leveraged products? I don't understand. But, you know, it's very slow moving. But just options, no pun intended here. Amazing amount of options for whatever kind of style of portfolio you want to build, whether you want more diversified anchor positions where all the single stock ones, besides Purpose, have all in ones, right? So there's HHIS, there's HHIC. Um, 9 Point has the all-in-one ECHI. Purpose doesn't have one, an all-in-one, but I mean, so many options on the single stocks. Then you have what I call innovation twists, like things that are really innovative. I would put the Daymax series from Hamilton as some of the top innovations that have launched: C Day, S Day, and Q Day. C Day and S Day especially because now the dividend investors are really are really in trouble. The ones that hate the cover call ETFs,
Yeah.
right? So you know who I'm talking about, right? I think we're going to talk some of these guys later, but you know, there's a guy who has a very similar channel name to me and has, you know, he's pretty obnoxious. He's got like the best punchable face. I feel like I hope he doesn't take offense to that, but he talked a lot of crap about me, so I couldn't care less. But then you have like the dividend guy who hates cover call ETFs. Right. He's a French Canadian. I'll recognize that accent from a
Mhm.
mile away because I grew up in Quebec. So I have the same accent. But S Day and C Day especially, it's kind of like dividend stocks meets covered calls. So that's really an innovative twist that they put. They integrated not only dividend stocks, dividend investing with income or covered call investing, but they also managed to add the zero DTE option strategy, which is a new option strategy in those. Right. So those are very interesting. The single stock ones, look, if you really like a single stock or a single company, I mean, I talk to a lot of people who I consider them more really old school investors that have a portfolio of maybe 10 to 15 stocks, and they had their entire money in those for decades. Things, you know, sometimes it goes well and sometimes it doesn't, right? You know, like Bell Canada,
Mhm.
or a lot of Canadians have a lot of the six banks, right? It's typically gone. Americans, I can't tell you how many people I talked to that had Microsoft for the longest time or Apple for the longest time. So now they have an option to kind of, if they want to switch to the covered call version. So if they're emotionally attached to their stocks, they could literally transition Microsoft to Microsoft with covered calls and a little bit of leverage. So you're going to still get approximately the same performance as just owning the Microsoft. Now you're getting that monthly cash flow. It's kind of it solves the drawdown problem that a lot of these investors have that are sitting on these big gains and not much cash flow. They solve that problem. So it's been a very innovative year. Lots of competition. All the fund managers are trying to one up each other, right? You got Biggie and Canny. that recently came out. Obviously, they saw HHIS's success and they said, maybe we could do our own. And you know what? Let's do 33% leverage. Let's do more of a systematic approach. So just amazing innovation. And, this could confuse a lot of newer cover call ETF investors. I'm sure you heard this before. Which ones do I choose? So again, it goes back to education. You have to know, okay, what are the stocks inside? What is the cover call strategy? How much upside am I giving up? And what is my priority? Is it total return or is it maximum cash flow? And that's how you could build a portfolio as well. How much risk do I want to take? Do I want to start dabbling in these single stock ones, or do I want just the diversified ones that I don't have to babysit, right? So it's been a great year.
It has. I'm a diversification nut on so many levels. Like I don't even really care about overlap. I just like exposures to all the different strategies, the different fund managers, their leadership infrastructures, and who's writing those calls. Like to me,
Hmm.
I go beyond that. And like we were saying, even mentioning earlier, diversification, even in how you get your return, price performance and premiums, right? Just a different way where you can capture some kind of return, especially when markets are choppy. There's much conflict in the world, potentially more conflict in the world, sovereign debt crisis, inflation, interest rates. Like it's just a choppy environment. It's not like the 2010s where it's just right. It's just grinding upwards to the right. So it's an environment where there's a lot of uncertainty, where active management plays, I think, a really important role. And so for traditional index investors, I'm not telling you this is the best thing for you. I'm just saying it's worth consideration. Not get super hung up on the fees. The competition is breeding lower fees. It is incredible how low these fees have come in such a short period of time. On
It's
average,
unbelievable.
we've seen like 0.65 basis points, and now we're getting down to like 0.29 at this point. Like we are starting to see a 50% reduction in management fees,
Yeah.
which is incredible in such a short period of time. And even I just wanted to give a shout out to Hamilton with the C Day, S Day, and Q Day. I know we were saying how, the growth bros are saying stuff like, well, your upside's capped, you can't grow. Well, I mean, look at what these guys do. They're running cover calls on the leverage portion of those strategies, meaning the other 100% can, guess what? It can just grow. So there's more competition, there's more innovation. It's just and it's so exciting to be part of it, to see it and to share the knowledge and share like how we invest I mean, even for the newer investors, like, I mean, we were at one time newer to this stuff as well. And I mean, all I'll say is when I first got into cover call ETFs, I did a lot of reading on it. It took me a while. I watched a ton of your videos, Adriano, and eventually I wanted to do a channel on this stuff as well back in, when I started my channel almost 3 years ago. So it's just about just get exposure and just get with the language, and you'll start to pick up on it. You'll get over that bell curve understanding where it's not just all of a sudden it'll be like second nature. You'll be like, how does nobody know about this? That's the kind of place that you'll come to. But yeah, there's certainly
Yeah.
there's a lot of funds in here that even some of the commodity stuff with Global X,
Hmm.
did a copper fund, a silver fund. In April, there was we got leverage on GLCC with GLCL, and we got some Bitcoin. We got some Bitcoin leaders from Harvest, some Bitcoin stuff from Global X as well, and again some sector plays like Oily and
Yeah.
uh,
Amazing innovation.
right,
Amazing innovation, right?
exactly. And I mean, the big one I think this year is just the competition in the single stock cover call ETF space between Harvest and Purpose and 9 Point. So it's all good to see. I love the choice, and can't wait for more to come in 2026.
Yeah, for sure. I mean, it's been incredible. There's a lot to cover, a lot to talk about. Like we discussed, competition is good in the space. It brings management fees down. Just a note on management fee, because you said, we talked about capped upside as a main concern. Another big criticism slash concern is the higher fees. But people need to remember, very important to remember, and this line just destroys that argument right there. Total returns are net of fees.
Hmm.
Period. Total returns are net of fees, they're net of leverage costs, they're net of MERs. So look at the total returns instead of looking at the fees because that's what's really important. So it's, someone who's a bit newer at this, they look at a leveraged fund like a QQCL, for example, with an MER of almost 2%. Well, that's because it integrates or it includes the leverage or the borrowing costs that Global S incurs, which are going to be much cheaper borrowing costs than if me and you would borrow money. So
Totally.
if you look at the total returns of QQCL versus the Nasdaq 100 index, it's pretty much on par and slightly outperforming it, I believe, or it's doing its job. That's net of fees. So looking at fees, a newer investor might, look at QQC or something and see, I don't know what the fee is on that 0.19 basis points. Then they look at QQCL, holy crap, it's almost 2%. I'm not going to buy that. Look at the total returns instead.
Yeah.
That's the best, not financial advice. That's some financial advice. Look at the total returns, okay? Very, very important. But yeah, I agree with you. I mean, now we have copper, we have silver with cover calls, we have Bitcoin with cover calls,
Uh,
HBTE. I found that one was really Harvest's best innovation of the year. If we're talking innovation, I know we talked C Day and Q Day and S Day, but HBT, what an innovation. What a cool way for people who want to dip their toes in Bitcoin and are income investors to get in that one instead, because you're not only investing in the raw commodity or just strategy. There's Bitcoin miners in there, but there's companies like Robinhood, like Block, like Coinbase, which are, kind of connected to Bitcoin, but they
mhm.
have other stuff, or their businesses are much bigger than that. So that's a cool way to get into it, if you will. So that's a really cool innovation on Harvest part. You have Evolve with the 33% leverage ones now, at the money 50%. We'll see how that one comes out. They just came out with 60, right? Canadian banks. I think Harvest is launching another Canadian banks one, so we'll see what the difference is. So competition is good.
Yeah, I really like it. Adriano, let's move on from the fun launches into
Yeah,
our next segment, which we're going to be going in the Wayback Machine, the time machine. I'm going to show you a 2-minute clip from last year of us talking about our predictions for 2025. Let's have some fun with it. We'll give some commentary on what we predicted, and then we'll talk about what we think is coming in. Well, and anyway, we'll talk about what we got right, and then again towards the end of the video, we'll talk about what our predictions are, what we would like to see in 2026. So here we go. Two different locations. I'm in a different place. You're in a different place,
I
but
can't wait to see where I was.
yeah. Okay. Here we go. Here we go.
So I think we'll stick with the Canadian market. I think what's really the next step and what's really missing is the first daily options covered call ETFs,
Yeah.
right? So right now you can only do them on the three major indexes in the US. So just think it's crazy that none of them have come out with this yet. I'm very confident they will be. I mean, it's just crazy if they don't. But an S&P or Nasdaq with daily options, I just say just copy what XDT and QDT does. Like that's all. Literally, just copy them. You could copy the same stock symbol if you want. Another thing I think is really cool and I would like to see is weekly distributions instead of monthly. I think that's awesome. You get to see a weekly compounding effect. I'm really having fun with my retirement accounts, going in every Saturday, updating the number of shares because I went all in, as you probably know, on QDT, which is a NASDAQ 100 one from Roundhill. And every Saturday I just go in, I update the number of shares. And it's just a crazy compounding effect weekly. So I hope that we would see some weekly distributions in Canada as well and more leverage options as well, right? I would love for Hamilton, for example, to come out with leverage versions of all their yield maximizer ETFs, right? Can you imagine a 25% leverage version of QMax or HMax or SMax? Or UMax, right? We could have 15% yields with those. Other fund managers as well, like Evolve, the leverage QQQY. More all-in-one options would be great. Evolve doesn't have an all-in-one style ETF. That would be good. as well, or the Harvest and Purpose. I really want. Where's the single stock micro strategy cover call ETF?
Right.
Um,
Well, there we go. There was a few predictions in there, Adriano. Um,
A lot came true. A lot
Yeah, I
came true,
know.
right?
I know. I had to, I'm not going to show it because I kind of got a little bit long-winded. I wanted, well, not that I wanted, I was like, what I had mentioned in the video, well, that you don't see there is cover calls on leveraged ETFs. So
Like
existing leverage
Granite shares.
ETFs, and that eventually actually happened with Granite shares.
Yeah.
I also thought that we'd start seeing more American funds cross over into Canada, just like we saw with JEPI and JEPQ, because that happened that happened in 2024. But we never really saw that. Those funds they never really took off in Canada. So it was, I guess, not really much hunger from any American fund managers to cross over into Canada. But anyway, you had a couple. I think you were correct with the daily options in Canada that eventually came true, as we saw from the release of those different funds from the Daymax, SMAX, CMAX,
Yeah.
or C. Sorry, whoa, not what am I talking about? S Day, Q Day. Anyway, and weekly distributions. We got more or less semi. There's some regulatory stuff, as I understand. They're not quite. I don't really fully understand exactly why, but I just hear there's some regulatory stuff to
Yeah.
get these
They,
things.
they want to do it.
Yeah,
Everyone from who I spoke to, a lot of them want to do it. They can't do it. They can semi-monthly is the max they could do.
yeah,
So that would have came, and maybe it'll, when the guardrails, or I don't know what the restriction is by who it is, but that one probably would have been there if it wasn't for the regulatory.
yeah,
So yeah, I
yeah.
mean, yeah, I remember QDT. I remember in my RSP now, and liquidated all our retirement accounts. But QDT is one of the top performing, still Nasdaq 100 zero DTE. But Top Alpha is the king, right? They have T SPY and TDAC now. I think, if you're gonna ask me, I don't know if you're gonna ask me this. What do you want to see in 2026? I want to see. Yes, we have Q Day and C Day and S Day. I want to see a classic S&P and Nasdaq 100 zero DTE lightly leveraged fund. So Tap Alpha is coming out with their 30% leveraged T SPY and TDAC soon. I know they told me that they're kind of interested in exploring the Canadian market. I think it's just a matter of time, but that's what I would really like to see next. Just a classic zero DT index strategy with a little bit of leverage. I would love for Tap Alpha to cross over to the Canadian market. I would buy the Nasdaq one in a heartbeat. And I think the best provider to do it, to be honest, and I've told them a million times, lots of times. I have pretty good relationship with people at Global X, more the marketing, but I've spoke to the CEO in person, and I mentioned it. Global X Canada is the perfect provider to launch the first classic index zero DTE strategies because they're like the king of the indexes, right? They have all the indexes with the leverage, all the indexes with cover calls, and all the indexes with cover calls and 25% leverage. So they're like, to me, the perfect fit. It makes the most sense. What do you think? What do you want to see next year, man?
Oh, well, I was gonna say we will get to that. I do have
Okay,
some
sure, sure, sure.
I do have some thoughts certainly around that. But we are gonna get to that, investors, fairly quickly here. We got one more segment, then we're gonna get into predictions. That will be a fun segment. Trust me, I want to talk about it. But one of the other predictions that you were right on was a single stock micro strategy that we saw from Harvest. I believe Purpose has one as well, and
Do they?
so we
I don't know
got
if they don't have MSTR. I asked them about it, I believe, and they're like, we don't want to do MSTR for some reason. It turned maybe they were right in that regard because
yeah.
MSTR is really having a bad time right now. But hey, highest volatile stock for a reason, right?
Right, exactly. So we got some right, we got some wrong as always. So let's move into our next segment. I think this will be a fun one. let's give some awards for funds of the year from 2021. Your list. I'm gonna give a list. And again, investors, this isn't necessarily like the best performers. They were maybe the craziest, had the highest yields. No, like I think for both me and Adriano, I think we're gonna give our own definitions of like why certain funds are take the man or they're on top of the mantle for that particular year. So let's start with 2021, Adriano. I think I already know what you're going to say. We haven't talked about it, but I already know what you're going to say. So, but
That
go
so
ahead. What
2021 is so easy.
yeah, 2021 is so easy. So tell everybody what's the ticker that you think, well, maybe first define for you what for you you would give, like why would you give the award to a particular ticker in any given year? Is it different year over year, or do you kind of have maybe the same idea as to like why a certain fund would get maybe that title as call it the fund of the year kind of thing?
Yeah, well, maybe I should have prepared for this segment because
Okay,
2021 I know off the top of my head, but
yeah,
2022, three and four, I
gotcha.
can't really, I don't know can't really remember which funds came out, but hopefully you have a list. Maybe we could go
I
through
do. I
that.
have a list. We'll see if you agree with it or not.
Oh, excellent, I love that.
Yeah.
2021 was, I believe, where we went from the dark ages to the renaissance of the covered call ETF landscape, and it's the OG. I literally came out with a video on like an homage video towards this. It's my opinion. Not only is it the fund of the year of 2021 by far, it's one of the best Canadian listed ETFs. Period. Period. I made I don't know if you watched that video, but I go through 10 points why. And I literally tell people, try to change my mind. Tell me another ETF that has these 10 characteristics. You will not find one on the Canadian stock market. So obviously, I'm talking about HDIV from Hamilton, right? They changed the name to it recently. It's now called the Hamilton Enhanced Canadian Covered Call ETF. Before it was like I can't even remember, multi-sector,
Multi-sector, yeah, multi-sector.
which is, yeah, it's a little bit more straightforward now. It's not exactly 100% Canada. It's about 70 Canada, 30% US. But in terms of its strategy, diversification, functionality, evolution over time, but it's amazing. Total returns, of course, amazing. But the reason why it's such a pivotal fund is because it's the first one. I'm pretty sure it's the first one that added that 25% leverage idea. That's by far in the last 5 years, it's been the most important idea in the covered call space because now finally, let's put Tap Alpha aside, who have found seem to have found the holy grail. But that's because zero DTE came out. At that time, to be fair, there was no zero DTE options, right? That 25% leverage is extremely important because now we actually have a chance to have actually the same performance as the underlying and also get the cash flow,
Yeah.
right? But there's so many other reasons. Never reduce the distribution. They've evolved the fund. It's great for all three styles of investing. Is there an ETF that's great for all three styles of investing? No. Dividend investors, check. Lots and lots of great dividend stocks in there. Growth investors, check. It's beating the S&P 500. Income investors, check. You get a really nice double-digit yield with no distribution decreases, only increases. So there's no ETF out there like it. My wife had an extreme amount of fun coming up with that thumbnail. I just hear her laughing in the other room. She's like, come and see this thumbnail. Thumbnail of the year for sure. Definitely by far 2021's best fund, best ETF.
Yeah, I'm pretty sure I commented on that video. I said that that
You
was my
did.
most favorite thumbnail that you put out in 2025. Thumbnail of the year, in my opinion, for your channel. It was great. Yeah, I would agree with you. Yeah, it's HDIV, and just so investors are aware, my definition of like what takes the fund of the year, the umbrella term is innovation. What does it do? What does it make other fund, or what does it incentivize other fund managers to do? HDIV got Harvest with HDIF. It got Brompton with BMAX. All those funds came out after the fact. HYLD, even by Hamilton, came out after the fact. So there was a knock-on effect, which means that there's lower fees, there's more investor satisfaction, and also too, where else in the financial realm are we seeing the most innovations where products are being developed at this kind of pace, where so much, like so many resources are going into it. I mean, whatever the cover call, it's something like $64 billion. Like the market is speaking for itself as far as the inflows into cover call ETFs. So, in my opinion, 2021 is HDIV for sure. Now, 2022, I think investors, especially here in Canada, they are going to think I might say something like HYLD. I am actually not going to say HYLD, which might be a bit of a surprise. I am actually going to name an American fund that I think is really critical to the American space, which is
Oh,
SPY.
we could do US funds too. I wasn't aware
Yeah,
of
yeah.
that.
Sorry, I guess I should have mentioned that as well. So yeah, but I wanted to give a shout out to Spy Eye. That was launched in 2022. These guys are knocking out of the park with quality cover call ETFs. They are not about shrapnel approach and just flying every single fund out there. They really do seem to take a measured approach with how they launch funds. And Spy Eye is a great example of relatively stable distributions, like, and I mean really stable, like fairly stable. It's the most stable variable distribution, like, and especially over the course of the last since inception, and it's only increased over time. And along with that, you get a steady 10 to 12% yield. Performance is there. It just checks all the boxes of, I think, what a lot of just sort of general investors like to see. So for me, it's actually going to be Spy Eye on the American side of things, and I think it's going to set the stage. I think for more to come. I feel like the Americans are a little bit slower at really adopting sort of the more sort of just general index cover call ETFs that seem to like to go for the high flying yields and whatnot. But I think Spy Eye really tapped into something, and their AUM is proving that there is a hunger for that, for just stability.
Yeah, no, for sure. I agree. I kind of, I've been talking to the Neos guys for years now, and partnered up with them. They sponsored my channel a few times. They remind me a lot of the team in Hamilton ETFs.
Yeah.
Neos for me is like almost like the Hamilton of the US. They're very they're very methodical and thoughtful about the products they launch. They'll take their time with it. They're very very smart. They have a lot of options experience, and they're not gonna have a suite of a million ETFs. They're gonna be very, they told me that's on purpose. They want to really solid products that have the demand. So yeah, that's really really a good one
Yeah.
for sure. And it's spurred. Now they're like the kings. I mean, on the US, you got a dozen more than a dozen, I think, S&P 500 cover call ETFs, Nasdaq 100, Russell 2000. So they just launched their EAFE one as well. So now they have four indexes, and it wouldn't surprise me if that one does well to launch the emerging markets one. But yeah, I mean, super steady yield. It's kind of a really cool way, for example, to like draw down, and then an investor wants to draw down their S&P 500, you could switch to SPY Eye and just expect a smooth sailing 12% annual, 1% monthly yield. Very tax efficient as well. Those guys know what they're doing. I'm super psyched for their. I'm kind of sad because now Neos and Tap Alpha, which I feel are two of the best providers that have the best S&P Nasdaq, they're coming out with leverage versions, but because of my residency, I only invest in the Canadian listed fund. So super excited about those. The leverage will go up to 50%. Will be more in the modest leverage up to 50. So that should do really well. I wouldn't be surprised if they beat the S&P.
Yeah, for sure. All right, moving to 2023. This one was a really tough year. In my opinion, it wasn't like there was a fund that really there was just more funds that came out, but there wasn't something that really just was like that's the most obvious one. So this one's a little bit more not it's not an AUM killer, it's not, but it encompasses a lot of funds that we actually like. So I'm gonna actually give 2023 to EQCL Global by Global X. It's sort of like an XEQT, which is very
Yeah.
popular, captures the American market, captures the Canadian market, the developed market, the emerging market. EQCL is a fund of funds. It holds very popular index funds like QQCC, USCC. There's the Russell one. There's an emerging markets one and a developed markets one. So that to me, it was I sort of I felt like EQCL is my way of saying, well, I want to pick like USCL and QQCL at the same time. So EQCL allows me to kind of do that with a pick like that. Like you had mentioned earlier, Global X have really they've really targeted the index niche and have become really well known for like those pure index cover call ETFs. So for me, it's EQCL.
Yeah, that makes sense to me. Global X Canada were smart in going the index route.
Mhm.
So they have all five indexes and even more. Right? When I say the five top indexes to get you the world, the S&P, the Nasdaq, the TSX 60, MSCI, EAFE, and MSCI emerging, right? It's basically, there's XEQT and VEQT, FEQT, ZEQT, and HEQT from Global X. They made a covered call version. That's all it is. It's a covered call, 25% leverage version. Of course, there's EQCC, which has no leverage. Same thing without the leverage.
Yeah.
But to me, something like that, I would personally never get because something like that, or even an XEQT, is for someone who has, my opinion here, zero conviction in anything and anyone, and and is the laziest investor in the world. If you fit those two criterias, something like an XEQT, or if you're an income investor, it's just the income version. EQCL, I will always get the leverage version, right? So you could get approximate same performance as an XEQT, or in this case, really HEQT. But they also have HEQL. They have 25% leverage, no cover call. So Global X Canada really, if you like indexes, it's them. Like they have every format. And unlike the Global X US, who I feel have the steam engine of cover call ETFs, now that I have the knowledge, I understand this QYLD, RYLD, XYLD. That's the steam engine of cover call ETFs. Those you buy if you're trying to short the market, you could buy that. If you think the Nasdaq's going down, like if you're Michael Burry for the last 10 years and think the Nasdaq's going to go down, and he's been wrong for 10 years straight, but you could buy a QYLD because they're literally doing cover calls on the whole thing. Zero upside, nothing, zero.
Yeah.
Right? The only reason they didn't do 10 reverse splits by now is because they only give out 1% of the premium every month. They keep they keep that 2 or 3 or 4% in the net asset value. They don't give it out to you. Someone like YieldMax writes even a bit less covered calls, but they give it all out to you. So that's why they had to do these reverse splits, which leads to a lot of misinformation and a lot of dumb people out there that still don't understand that reverse splits and splits don't really mean anything, right? Getting 10 dollar bills instead of 100, or $100 bill instead of 10 dollar bills, the same thing, right? Nothing happens. But anyway,
Yeah.
I'm going down a rabbit hole here,
No,
but
no, it's so funny you mentioned like the global X. Like I was invested in XYLD
same.
for like
QYL, same thing,
a
right?
year, and sometimes I'll show on the channel just like what my distributions have been like over the years, and then you see this segment right at the beginning of my income investing journey, and you see these like wild swings, and that's like XYLD. Sometimes it paid out twice a month, sometimes it skipped a month, sometimes it paid out once a month. Like it's just all over the place, and that was the fun that taught me that I want better stability and better predictability. I want to actually see my distributions act like almost like a set of stairs instead of like a I don't know, a level you see on like Mario Brothers or something, right? So yeah, to me that anyway.
Those
Um,
are 100% rinse and repeat
yeah,
systematic
yeah, that's
funds.
right.
They're systematic in terms of the distribution policy, and they're systematic with the cover call strategy.
Yeah.
They're writing at the money on 100
Yeah,
every month.
it's active management without it's like active management without active management in the right
It's
when you
not,
think
there's
of
no active management there. There's
right like
barely
well that's what
anything.
I mean. It's like you push a button to maybe place the to place the trade, but that's about it. Whereas like when I think of active management, I think of like people are around like almost like a radar screen, like on like a naval vessel, like they're adjusting to like real time situations, but that is not what you're getting with a QYLD or an XYLD kind of fund. But I digress. So anyway, EQCL. Global X in the summer of 2023 released all those leverage funds of the indexes, and
Yeah.
anyways, EQCL just it captures sort of all that, and that's where I wanted to say that to me was fund of the year. Okay, 2024,
If you don't
20.
mind,
Yep,
just very quickly, a little tidbit of information.
sure.
Global X Canada and Global X US, yes, it's the same parent company, but it's two separate shops.
Yeah,
So it's very important for people to understand that the cover call strategy here is complete. The team, it's purely Canadian people, completely different. They don't have the same managers or marketing or nothing. So that's very cool. So people think, oh well, Global X Canada, QYLD, no, like no relation basically.
yeah,
I got this information from the CEO himself when I talked to him. They're allowed doing 100% their own thing. US does their own thing. Global X Australia does their own thing. So that's a pretty cool structure. It is a private company, so it's cool that they could just a small tidbit there.
and
The cover call strategies with USCL and USCC QQCL, they don't go past 50%
that's right.
coverage. So
Yeah, it's and for the newer investors out there, Global X Canada was actually known one time as Horizons ETF. So a little bit of a walk down memory lane with I still remember the like website from Horizons. I really like the website, kind of miss it. Anyway, okay, we're going to go into 2024 as we got two funds left. 2024.
that's
I
an easy
am
one.
to well, let's just I'm going to give this one to HYLD. HYLD. That's the one I'm giving it to, mainly for the innovation of a fund. Basically, it internalized all of its ETFs, kicked out a bunch of third-party funds, and Hamilton got their own options team. And you know what HYLD did in 2024 is they showed, look, let's look at our lineup and let's just improve what we already have. They're probably the best example of just that. Let's make what we already have better instead of just shoveling out more funds. More funds doesn't necessarily interest me. I just want quality, good funds, and HYLD takes it for me in 2024. What do you think?
Yeah, and by the way, they did the same thing with HDiv,
That's
right?
right.
HDiv and HYLD became HYLD and HDiv 2.0 in early 2024. They got Nick Picard, who used to work at Global X Canada. Now he's the head of options. I've met him in person a few times. He's a great guy, very smart, got a degree in mathematics. It's exactly who I want managing my options. I had him on my channel recently. Just my latest video was 45 minutes with him, and he's always open and candid, and they're very honest and open in what they do. So yeah, it's hard to argue. It's hard to argue HYLD for 2024. I think that was a pivoting point, especially for Hamilton ETFs for their firm. I mean, they're flying now. They passed 10 billion AUM. They moved to a super chic, cool new office, which Erica and I got the tour with when it was empty when we were at the Blossom event. So that's cool. Maybe next year we could take the tour when it's full. But I met the guys at Hamilton and super smart guys, very innovative, and they're not gonna come out. They're not gonna just launch stuff, willy. They take their time. So of course, it was a great thing to internalize everything, right? Lower the fees dramatically. And that's why whenever I do the total returns for HYLD, I always start at early 2024 because that's really when it became the real HYLD. You kicked out all those, and, QYLD, RYLD, XYLD used to be an HYLD 1.0, and I feel that's what really dragged it out because, like we know, they don't capture any upside, and it came out right before the 2022 crash. So it was really bad timing, but the fund has recovered. It's been flying total returns. It's outperforming the S&P 500 since 2024 by a lot.
That's right. Yeah. So it's to me that one was it just goes to show they really set the example that yeah, you can change a fund internally. And I know back when Global X was Horizons, they did that with a few of their other funds as well. USCC comes to mind, ENCC comes to mind, different ticker symbols. They
Yeah,
were
fun fact for
releasing
you. Did you know who was the inspiration to change the very popular and best performing oil and gas cover call ETF ENCC NCL? Nick
Nick.
Picard.
Nick Picard. Yeah, I mean, I figured it was probably Nick. We just spoke about him. He's a rock star in the options Canadian space. Okay, we are going to move into our last award, 2025. I'm going to give this one to, when it comes to innovation, to a fund manager that gave us a product. I almost like to compare it to the iPhone Apple announcement where it's like what's his face oh shoot I'm having a brain fog with the Apple Steve
Steve
Jobs.
Jobs?
Right, yeah, Steve Jobs. He's showing off the iPhone. It's the thing that we never knew we needed and wanted.
Yeah.
And I'm gonna say the equivalent of that, but for cover call ETFs, is HHIS. HHIS proved that, look, there is a heightened demand for not just more yield, but also more performance as well. And it showed us in 2025 that you can get that and it can be a core position in your portfolio. You don't necessarily, it's a diversified fund. And I know they've added as with more launches throughout 2025. But there's certainly, I would suspect, more funds to come kind of in that light as time goes on. So for me, that's HHIS. I think takes it. There's other ones we've talked about, the day fund or the S day, Q day, and all that. There's other ones. It's not like there wasn't any other innovations, but this one for me was I would say that one of the bigger, more impactful ones that I've seen in a lot of portfolios and hearing a lot of chatter about. Um, what do you think?
Yeah. I can't argue with that. I think you got me at more yield and more return.
Yeah,
Right there, the two
yeah,
magic things that I
yeah.
want. HHIS definitely delivers that. I thought that was going to be for sure the 2024 pick because I think technically it came out in 2024, right? It's did it come out at the
No,
end
January of 25.
Okay, so my mistake there. But listen, the numbers speak for themselves. This thing's not even a year old.
Yeah,
It's 1.2 billion,
yeah.
right under that. I also have a good relationship with the people at Harvest. I like them dearly. We toured their office as well. My wife, they were very generous with us. They came and get us at our hotel. They drove us. Mike Kovacs and his wife, who are the co-founders. So we kind of relate really a lot with them because, my wife and we founded Passive Income Investing. They're also a couple that founded Harvest a long time ago. So super cool, nice people. Spent a lot of time at their offices as well with Paul McDonald and their options team. And yeah, HHIS, very, very, very popular product. Really packaging those single stocks. They're those more higher volatility, big options market stocks. They screen the stocks for big options market and a little bit more higher volatility. It's to me, I've always called it kind of like a concentrated Nasdaq 100.
Yes.
I've always kind of seen it that way. It's my personal biggest position in my portfolio.
Yeah.
HYLD is there. HHIS is currently about just under 27% of my portfolio. It's in my grandmother's account. It's my parents' TFSAs it's really a beautiful mix of higher growth potential because of the names, right? But it's like you said, it's also really nicely balanced because it's not just these crazy stocks that, like Circle and Reddit, SoFi, MSTR. There's also Netflix and Costco and the Mag 7, which, in my opinion, are practically like consumer staple stocks now.
Yeah.
Like Apple and Microsoft and Google, Amazon, Facebook. I mean, these are digital monopolies now. To me, they're not risky stocks anymore. Although they still have a lot of great volatility, which is awesome for us. But like I said, Costco's in there, a nice little stabilizer.
Yeah.
I absolutely love that they took out the guardrails of 15 stocks. Now they could add as many as they want. I don't think they'll go over 20, 25. They've announced even more single tickers, another six, I believe. So I don't think they'll put, I don't know how they're going to manage HHIS, but I trust them 100% that, they do want to keep it diversified. They do want to keep it high yield, more innovation type companies. Torquey. I love that expression. I feel like that really encapsulates what HHIS is. And I trust Harvest with their cover call strategy, 25% leverage. They're not going to go over 50%, but they more comfortable at the 33, a little bit higher than that sometimes, but I think they do 33 to 45, which I like. I don't personally don't like too much cover calls either.
Mhm.
I think to me, my max level is like 50%. If you're going over 50%, I'm not interested. That's too much capped upside, in my opinion.
Yeah.
But 50%, if you have some leverage, fine. A little bit lower than that, I like it a lot.
Yeah.
So yeah, I agree with you. It's a community favorite.
It is by
Yeah.
far. And okay, well, we've now awarded and all for the different tickers for since 2021. As you mentioned, it's the we're in the golden age, the Renaissance era. I often refer to 2021 and beyond as the modernization of cover call ETFs. It's not like it's just the evolution, the truest evolution really began in 2021. So we're into our last segment. This is the fun one. These are the predictions, what we think we'll see in 2026. So let's start with you, Adriano. What do you think we're going to see in 2026? What do you want to see?
It's we have so much already.
I know.
So
What's
it's pretty
missing at
crazy.
this point?
What exactly what's missing at this point? So I think each fund manager kind of has their flagship products now and what they're going to focus on.
Mhm.
There's a lot of key 1 year anniversary, total return anniversary dates next year, which I'm looking forward to.
Yeah.
Um, it's interesting. It's very interesting. On the Canadian side, I think we have mostly everything we need.
Yeah.
We have, sector, we have so many banks ones, Evolve just came out with another bank one, financials one. Harvest is going to come out with another one. It's more curiosity. I'm very curious to see what Harvest is going to do with their two new funds that they recently announced
Yeah.
because it's the first time, well, not the first time Purpose has a fund that does calls and puts,
Hmm.
but they have a diversified one with, I don't know the stock symbols, but one of them is a banks one, but one of them is just a classic equity. I think it's going to have both Canada and the US, and they're going to do calls and they'll have the potential to do puts as well. So once in a while, I've gotten comments, why don't they do puts? There's a couple of BMO has one that just does
Yes.
puts.
Yeah.
The put ones don't, I don't know, for some reason they're not as successful, but I think if maybe Harvest is trying to maybe mix it up a bit, do a little bit of both. So I think that's a very interesting innovation that Harvest is going to have next year.
Hmm.
I think Hamilton is maybe going to make a little comeback with new products because I think they moved office, they did a lot of stuff. I'm hoping for a little bit more kind of Daymax ETFs in their Daymax series. I think they could easily make, they could just do a classic Nasdaq 100 Daymax or maybe do some other little twists. For example, I suggested to them a Bitcoin one, a Daymax Bitcoin, where you like basically like QMax, you hold the QQQM, you just do the cover calls on QQQM, and you leave the IBIT exposure. So you basically get full capture of Bitcoin while still getting that 20% yield. That might be an interesting idea. So more Daymax stuff, more zero DTE stuff. I wish Global X would launch a zero DT S&P Nasdaq Russell with leverage. Hopefully they add leverage to their silver, their copper. That's another thing I told the CEO. Like I told them, why just launch them with leverage to begin with? Why launch an unleveraged? But they're a bigger firm and they have financial advisors who can't take the leverage version. So, but I wish they would just come out with the leverage version right away.
Yeah.
Um, yeah, I mean, what else is there?
You know what? I think on the zero DT front, maybe I mean I think we only get them on the indexes, but I mean there's got to come a point where we start seeing them on individual tickers. So that could be another area. Once that happens, then the floodgates opens for cover calls
Oh
as
my
well.
God.
But
Complete insanity once those floodgates open.
yeah, it will
Do
be. It will be
daily
crazy.
call on
So
anything?
just wait for that. You're going to get another barrage of single stock cover call ETFs, zero DTE. I think we'll probably on my end of things. I think, and we said this last year as well. I think we will eventually see, and we've already mentioned it, way more leverage on the American side of things. With the cover call ETFs have been a little bit slower for whatever reason, just
They're
to get
coming.
these out. But yeah,
Yeah,
they're coming. More concentrated plays. So HHIS comes out. You see Biggie from Evolve come out, and I think more will start to kind of come out with their own versions of like those kinds of funds. I got another one. It's very specific, but I think it might lead to something broader. So well, I noticed, of course, Global X has these. They've launched. They have gold miners. They have a gold cover call ETF. They have the silver and the copper, and they have oil. I wouldn't be surprised if they do like sort of like a sector all-in-one cover call ETF. So instead of an all-in-one that focuses on different sectors, it's like it's sector. It's kind of sector specific to more to the commodities and maybe they mix that in with some maybe single stocks. So maybe it could be a mix of like the all-in-one could have a mix of ETFs, but also single tickers, like say Cameco for uranium or something like that.
yeah,
And maybe that evolves, like maybe that hybrid idea kind of evolves into other stuff as well, where you see an all-in-one where it's you see a combination of ETFs and single stocks, like right on the holding page, which I can't say I've seen anywhere, but maybe there's something to it. Who knows? So that would be, I kind of look at what Global X is doing there. And all in one could be something, but especially as we move into, say, more of a, or maybe some might say it's kind of more like a conflict economy, getting things right. We see a lot of the West is doing more spending on defense. We see that in Canada. And of course, Germany just they're basically opening their purses and they're going to be pretty unrestricted now with defense spending. So maybe that has a play on in the commodities sector. We just saw with Venezuela, right, where with the tanker the blocking the blockade, right? And what happened to oil? It just anytime there's conflict, it's like oil just spikes. So there could be something there. It'll be interesting to see if we see some more plays in that regard. So that would be my 2026 sort of look ahead, what I'd like to see slash predictions. So, but
yeah.
yeah, go ahead.
I was gonna say I've heard that mentioned before. So the defense angle, like a defense cover call ETF is cool, or a multi resource. So
Yeah,
like you said, like why not just put gold with silver and copper and oil all together, or some other metals, and put that all
yeah,
together, and like you said, a hybrid. That cool idea, pretty cool idea.
yeah.
I would like to see a little bit more expansion in the crypto space as well. So Purpose really spearheaded it in Canada and around the world. They came out with the first ETFs. But in the US, we have XRP cover call ETF. Amplify has a Solana one and XRP one. So I would love to see maybe someone like Harvest, who's already in it, or Purpose already in it, expand those a little bit. I know Purpose is trying to add the 33% leverage to their Bitcoin and Ether cover call ETFs. That's on
Mm,
its way.
that's right.
But I would like to see a little, maybe something to do with the MSTRs, the preferred, because they have other ones. You know, they have Stretch and Strike and Strife and Stride. Why not maybe? I actually told Harvest this the other day. Why not maybe package them up? And because you know, for Canadians who don't want to convert their money to buy, you know, the American one, why not buy a Canadian ETF that, for example, just has those four equal weight maybe, because those dividends are all rock from all those preferred. So that could be kind of a, if obviously if you got to believe in Bitcoin and crypto, that could be kind of like almost like like a Bitcoin T-bill ETF, if you will, something like that. What about, you know, the average yield between those four is maybe 10.5, 11%
Yeah.
rock income. So untaxable. So that could be very, very interesting as well. Yes, we have MSTR with covered calls, but that has a lot of volatility. People are losing their minds on that right now. You know, I personally just buying more every week, but maybe something like that is a nice complement in HBTE, maybe like a Bitcoin preferred. And there's other companies now. There's Strive, there's Jack Mallers 21. They're going to come out with these Bitcoin products. JP Morgan's getting in the game, right? Everyone's starting to get in the Bitcoin ecosystem, if you will. So maybe something along those lines would be cool.
Yeah, I think I think the we are well past the acceptance of Bitcoin, I think, especially once the
Oh yeah,
ETFs.
yeah, yeah.
You just mentioned JP Morgan. I believe Jamie Dimon is recommending their advisors to have some allocation to Bitcoin in there. So
Vanguard's in.
yeah, exactly. They're all the trillion-dollar asset managers. They're into it as well at this point. But at any rate, Adriano, thank you for joining me for the 2025 year in review,
My pleasure,
2026.
man.
So look ahead, and we will certainly do this again for the 2026 year in review, 2027 income look ahead for next year. So thank you, my friend, for joining me once again for a video like this, and
My pleasure.
we'll see you in the next interview.